All right. Good evening, everyone. All right. This is just a market review of the 26th, not the 26th, the 16th of April, 2025. Okay. So we're just going to talk about gold and everything that you need to know uh, about the market, guys. So there is only one thing: AMD, accumulation, manipulation, distribution. That is very important. It doesn't matter what strategy you are using. There needs to be an AMD before you enter the trade. Okay. So I'm going to explain. Let me just share this. Okay, gold has been today. Um, there have been some good AMDs, right? So we've seen it. An example of an AMD. I'm going to show you. This is an example of an AMD. So we have an accumulation, manipulation, distribution. That means the market needs to create um, an accumulation, which means that you have certain orders coming in, right? Then the those orders are followed by the market creating a certain manipulation. What is the manipulation? It means that the market is trying to um, kind of reverse, kind of continue. Usually created by her move that show you that the market is going in a certain direction, but then it comes back in the other direction. So an example, here is an example. So we have this level here. So as you can see how big these candles are. When you look at an healthy candle like this, right? Can you see this bullish? Small bearish, which was an inside bar. Then there's a breakout here. The majority of traders will think this means that it's a continuation pattern. So we are moving up, right? So we're going up. So the buyers, so when you think about it, where will be the buyers here? So we're going to have the buyers on these areas here. People who are going to buy. But now, here's the thing. Think about it. Where are these buyers placing the stop loss? They are placing the stop loss here, low of this candle, because this is the candle that helped them buy. So you need to think now, wait for their stop loss to be hit. So I'm going to give you an area there. So this is the area the market is going to look. All right. So we wait for the market to hit the stop loss of these people. The market comes, hit the stop loss, so these people have lost. So what's happening here? You have those who think that it's time to give up on this trade. But when the market reaches this level and come back up, what do they think? They think it's still gonna go up. But now, for us, we are looking for what? Accumulation, manipulation, distribution. So this is the accumulation. There was here a manipulation. You can see the market showing a fake breakout. Now we need to wait for a distribution. Can you see this drop here? So now we have this distribution. So the market is showing us it's done manipulating, it shows a distribution. So we need to look for an area of interest. An area of interest is created by what we call a fair value gap, something like this, where the market, one candle closed, the next one closed below, but when the third one starts forming, it does not go back to the previous candle, but it leaves an area which we call a fair value gap. But now we don't just look at any fair value gap, we look at fair value gap after a break of structure, which is a change of character in this case, right? A break of structure can be different from a change of character, but we're looking for a break of structure which is equal to a change of character. We were having an upper trend here, this break of this level here, which shows us where the stop loss was going to be for these traders here. So when you look at this area, then we look at what the market does. After touching the stop loss of these people, we can see the market has created a fair value gap here. Can you see this small green candle here. I'm just going to move this so you can see properly. Can you see this green candle that closed here? Leave this area from here to here. So this is an important area. This is our fair value gap. So I'm going to move this to our fair value area. Okay. So this is the area I'm talking about. Can you see this area? So from this candle here to that greenness, this is the area. So now remember we broke here, there was a distribution and we placed our pending order in this area, and then our take profit, we will look at the previous area of interest, which is this low here. Can you see? Because when the market created this manipulation here, it breaks this area, it goes. So this is our target. So we actually look for something like that. Okay, so we have a short in this area, our take profit here, and our stop loss should be above. Normally, when you put your stop loss above the fair value gap area, it usually it can hit the stop loss and then it goes back. It's better to put it on the previous high or previous low, depending on where the market was going. Right. So we have something like that. I'm just going to move this. So our stop loss, so our entry will be here. Our stop loss above, slightly above the area, and our take profit. Yeah. So as you can see, this was like a 2.6 risk reward uh, strategy. So let's see. The market is live. The market is live. Let's look at this area here. Okay, we can see this bounce here. Can you see this accumulation? We have what we have here. Can you see this manipulation here? Can you see this candle? Same thing. 1, 2, 3. Can you see that? A strong bearish inside candle and then strong bearish, showing people the market is about to go down. But what does the market does? It comes back up. Where is the accumulation? Here's our accumulation. Which area are we waiting for? Remember those who sold here? Where was the stop loss? Remember, guys, what we said here? These people sold here. The stop loss was above here. So this is the area we look. This. So the market has proven itself to have broken. The market already broke this level here. Our level of. So there's now a change, a break of structure. So which area we're looking for? Now look. Do we have on that break of structure? Do we have a fair value gap? Look properly. This is the break of structure. I'm just gonna take it back here to see if we have a fair value gap. Yes, can you see this candle? Up, up, and then it creates this fair value gap. So this will be my entry. So I'm going to look for a buy in this area. My stop loss will be here. And then my TP will look at the next area. Which is the next area here? I'm looking at that. So that is the next area. So when we look at that now, you can see that this market, as we monitor the market, we see the area because we have another area of interest before our target. All right. So when we look at another area of interest before our target, which is this fair value gap that was created after the previous manipulation day. So the market will hem for that level first. So if you have two targets, right? If you have two targets, you need to target this area first. Once the market reaches this area, you can close some of your trade and move maybe the stop loss to your entry. All right. So we're going to observe this trade and see how this trade is going to go. So this is where we buy in this area here. Our stop loss is here. Our TP2 is there. TP1 is in this area. So once we move in this area of this Beverly gap, at least 50% of that area, we need to be able to move our stop loss to entry or close some of our trades. So this is a very important area. Okay, so this is where we have our entry. TP1 is here, and then TP2 is up there. Yeah, we will observe what's happening there. Okay, guys. So this is how you can see all these manipulation, um, and then we can look at it previously. We just need an accumulation, manipulation, then distribution back to the area that show us that. Okay. Remember the pattern we're looking for. So we need at the top to have this type of pattern. We need this continuation pattern. Okay. So let's look at this continuation pattern again. If we can see it anyway. Okay, we have it here. We have a bearish inside bar, bearish again. The market reverse at the stop loss was going to be here. We wait for it to break. It broke it. We wait for a fair value gap. So the fair value gap here was not created here. This market goes, and then we have a fair value gap here. So this was our entry here. So guys, this is a very simple strategy. So this is the area of our fair value gap. Stop loss right here at that candle that we analyze on that formation. So that's where we're gonna have our stop loss around here. I wonder why is this low like that? It's not really target. Yeah. So now, in the case where your TP is very close, you don't have an area. Better to go for like a 2-1 as you monitor your trade. Okay. So in this case, we have that. Okay. All right. Um, let's see. Let's see if we have. Let's see if we have another option. Um, let's see if we have another one anyway. Another manipulation distribution. I mean, another accumulation, manipulation, distribution. So that is very, very important. Okay, let's go back and see what's happening in the real. Because remember, we just analyzed something on the live market. Let's see how it goes. Guys, immediately, this is exactly what I'm talking about. This is exactly what I'm talking about. This is what I'm talking about. Can you see? After this pattern, we were actually doing this live. This was actually live in the market. So I was not just looking at past examples. I look at the current example here, show you here the same pattern, market break that level, come back into the fair value gap, and we're already there in the area. As I said, once we reach the area of fair value gap there, we close some of our position and then go. And you can see what the market does. The market always come back for some areas of fair value, those fair value areas. Like you can see now, this reversal is created by this. fair value gap here in this area. The market will come back. It's coming back to retest this other block here, this area, and then it's gonna go and reach that level. Okay. Hopefully reach that level. Our first target here, and then our second target. All right. So this work on any time frame, you need to make sure you look for an accumulation, for a distribution, and for an accumulation, manipulation, and distribution. Sometimes on a bigger time frame, you can just use 3 candlesticks, but the second one needs to break the high of the first one, but does not close above, and then the third one completely reverse. Okay, so I'm just gonna find another example among gold, and these can be found in different currencies. You look for an accumulation, you find a manipulation, then you find a distribution. Okay. And this is not a pre-recorded video, as you can see. It is a live video. So we are actually live on YouTube, showing you something live, guys. Um, Showing you something live. I am not pre-recording this. I am live on YouTube. I am live on YouTube. What time is it now? It's, let me see. Yeah, here's the current time here. Current time, Universal Time +2, GMT +2, 7 p.m. It's 7 p.m. I am live on YouTube, showing you exactly an entry based on the, on YouTube, showing you an entry that I could show you in the past, and I'm showing you live. I am showing you live. I am live. So this is, let's see where it goes. Let's see where it goes. Let's see where it goes. Hopefully we're going to hit the target. The market taking a bit longer. We have an area. The beauty of the market is that you must react to how the market is actually behaving. And when you understand this concept, when you understand where the market is coming from, where the market is going, that becomes the most important thing. So you have an advantage over the market when you understand where we're going. In this case, I know everything happening here is trying to aim for this line, for this fair value gap that was left. So once the market reached that level, then I am fine. But if I can see that the market has reached, because remember, this was the first level that we said the fair value gap in this area. So there's such a big fair value gap. The market has been dropping and never came back to this area. So if the market only stops here, it doesn't go back there, we will need to think and say, you know what? We can accept the loss here. All right. It's all about the risk management. We can accept the loss here, but never revenge trade. Never enter a trade because you're having another trade, because you had the loss. All right. So make sure before you enter a trade, you know exactly when to enter and you know exactly when to exit. That is the best you can do for yourself. It affects as well your mind, because trading is a game of psychology. It's a game of the mind. Trading is not just about having a strategy. It's all about having the right mindset. And if you keep placing trades in places without analyzing, without knowing where the market is going, without having the bias for that session, you will struggle a lot because it's going to affect your mind. Because when you lose the first trade and then you want to push the second trade because you think you have to recover the money that you lost on the first trade, you lose the second trade. It affects you. You lose your mind now. You're not losing trade anymore. You're losing your mind now. And this is how you blow your account. There is no way a real trader, someone who understands the market, can ever blow an account. Anyone blowing an account is a gambler. Yes, I said it. If someone tells you you can blow an account in Forex, you are listening to a gambler. Because any investor, any real trader knows about money management. And if you're a real trader with a good money management, there is no way you can ever blow an account. You can lose trade. You can go through a drawdown, but you will never blow an account. If you blow an account, it means your strategy is not tested. You've never backtested your strategy before. You don't have an edge over the market. You are just a gambler. Some of the gamblers are famous because they're gambling. They're making all the beginners think that the market is all about quick money. Forex is not a quick money scheme. It is the most difficult way of making easy money. You need to know where the market is going. And if it doesn't go there, it mustn't affect you because your risk management needs to protect you. So when we look at the analysis we've done here, you can see you look at three opportunities, and in the three opportunities, we've already won two opportunities with a risk reward of more than 1:2. So when we risk one, we win two. So we already plus four, right, in profit. So why do we have to worry about one trade? Even if you only catch six moves, if you lose it, perfect. What did you risk? When you place a trade, you know where your stop loss is going to be. Make sure you risk 1%, 2%, whatever percentage you want to risk. But whatever you want to risk needs to be based on a calculated method. Forex is about mathematics behind your money management. If your money management is weak, guys, money management does not mean a lot size. It doesn't matter what the lot size. Money management means how much you risk per trade and your strategy. How many trades can you lose with your strategy? Whenever I see someone placing the trade without a stop loss, I know exactly this person does not even know how the strategy works. They are hoping that the market doesn't come back to them. They may win every day, but the day they lose, they blow the whole account. Forex can humble you. The most important thing is to make sure you know exactly where you place the trade and you know exactly when you're closing the trade. We have this trade here, which we've analyzed live on the market. We are not pre-recording. I really wish every platform can sit and say there is no more backtesting. There is no more going back to previous. I don't know, maybe providing the data for people who are using the data to backtest, whatever. But I don't know. Maybe there should be something done to avoid that people teach things on a market that is not moving. This analysis here was done live. We lose, normal. But we respected the strategy. Accumulation, manipulation, That's it. So, looking at this, you need to react to the market. What is the market doing here? You can see we've reached the first target because we said the first target was supposed to be in fair value gap area, but we are targeting the next fair value gap area, so 50% of that area, which we have here. After this breakout, we never had a retest. So it's coming back here. That's where the market is going. So this is the area we end. But now, when you look at this, what is happening here? We're having an area of accumulation. The market is struggling here. After this rejection, the market is struggling. This is where you tell yourself, you ask yourself if you're already in profit. Like here, we're already in profit. These are the moments where you can create an early closing or move your stop loss to entry because you see this market behavior. Look at the previous example. The market shoot down in a short time. The market needs to go to your target in a short time. When you look here, look how fast the market went to our target in a short time. But as soon as you start seeing this accumulation here, you need to understand the market is struggling to go to your target. So how do you attack this? That's the moment where if you're already in profit, you move your stop loss back to entry. Why do you move your stop loss back to just lower? It's below your entry. Why do you move your stop loss back to entry? Because this market is not strong enough to reach the target. It's gonna shoot deep into your loss. So you move to entry so that when the market comes back to your entry before reaching your target, you're not making a loss, but you're coming back to break even. Then you observe if the market does not go below that level, does not go below the level of the stop loss and give you a move back up, you can enter again with the same target. But if the market goes to your profit, you enjoy your profit. Okay, so at this level, we are stopped at break even here. So if this market comes back here, we're not going to lose anything. We are back to zero. But what we're hoping for is for the market to reach our target day, which was a target of about 1.9, 1 to 1.9. Okay, so this is very, very important. Okay, let me check what time is it. Okay, so this is still fine. The 15-minute candle is about to close. Let me see what's happening in the 15-minute time frame. Okay, so the 15 minutes. Okay, the 15 minutes is giving me there was an engulfing here. Went in retest. There's a very low chance. With the 15 minutes that's creating, there's a very low chance for the market to reach that level. Yeah, there's a low chance that the market needs to go back there. Remember, on the 15 minutes, we have this heavy gap here, which the market needs after that move. The market needs to come and test this level. Okay, so let's go back to the 1 minute. I love trading gold on the 1 minute because the risk is really low and the market really moves. The market really moves on the 1 minute. Okay, let's see. Let's hope the market is going to reach our target. Reach our target. This is beautiful. All right. As you can see, guys, we are going back to this area here. We are already in profit. As you can see, the market is going straight to our target. So we are going in profit. Remember, we said at this level here, we move all trades. So we close the first TP. So we are deep in profit. We are deep in profit. Exactly what I did, guys. This trade was live. Was live. You can find it on on YouTube. On my YouTube, the trade was live. You can find the analysis. It's live, right? So I'm not doing any back testing or anything. I did a live analysis to have more information about this strategy, to know this strategy, what to look for, and what time to go for this strategy. Please, below this video, the uh, an email. There's a link. Make sure you click on the link to open proper broker and email me and let me help you guys free of charge. All right. So this is exactly what I did, guys. As I said, I did not show you the past market. I have done the analysis live on YouTube. You can watch the video. You can watch every candle. Exactly, the market did exactly what it said. So at this level, we're closing all profits because the target has been reached. As I said, once we reach this level, this fair value gap here, we have reached our first target. So our trades are protected. You can trail this trade up to the top. It doesn't matter, but you can see live on YouTube how the market is reaching our target. All right, guys, done with our target. I'm gonna go offline, enjoy the trade, and make sure you subscribe to the channel to make sure that you have future analysis. You always you're always updated with all our market review. We'll try and do this every day, and you can see what the market did when it reached our target. It's trying to reverse. So, guys, the market is not random. It's an algorithm that controls every move. Enjoy your evening, enjoy your day, depending on where you are in the world right now. Don't forget to subscribe. So I love the fact that I did this analysis live on YouTube. As you can see, I say the market was still around here. I gave you the analysis, accumulation, manipulation, distribution, and our entry was in this area here. This fair value gap here. This was our entry somewhere here in this area. And we say we're going to target this level here. As you can see, the market went exactly where we wanted to go. So, guys, make sure you subscribe to the channel. I have said it live, and you have seen what happened. My analysis were live on the live market. Many traders don't do this. They will rather show you the past of the market, but I'm showing you the live market. I'm analyzing live, and you can see how the market moves to target. Make sure you email me, you register your account using the link below, and don't forget to subscribe so you know the secret of the market. Thank you. See you next time.